Good morning, everyone, and welcome back. This is Daily Trading Analysis with the weekly recap for this week, which has been quite mute, quite quiet, because we didn't have a lot of news. The Feds speaking were kind of, well, not providing a lot of information. So we just went through the week up and down, a little bit of chop. We were holding those levels. And I think this week has been just waiting, waiting for just what I think everyone's looking for, which is earnings. We had earnings from the banks, some of them quite good, but I think everyone is waiting for next week's earnings, in which we start uh, with most of the big tech earnings, and inflation is there, but the interest rates probabilities are not changing. I mean, it's just a holding pattern that we are going to see also in the price action, which I think is good for exercising patience. But it looks like the market is just it's chopping, it's not efficient, which I don't really like. And we are going to see those kind of things in not only in the Nasdaq and the ES, also in other markets like crude oil, like the dollar, like Russell. I mean, it has been quite a boring week, honestly. Let's start with reviewing the economic data. Monday, three Feds, nothing new. Tuesday, Empire State Manufacturing Index came very in the negative. That was quite a bummer. And consumer inflation is just flat at 3%. I will call this also a miss. So not a good day on Tuesday. Actually, we sold off quite a bit on the NQ. Wednesday, the 30-year mortgage, also bad news. We coming from 636 to 652. So going higher, this is not good. Applications minus 17, this is not good. So also bad data for Wednesday. Thursday, the first big data came out, retail sales better than expected, 0.4, and we were expecting 0.3. So I think this is the first hit. And Amazon were pushing, Tesla were pushing a bit. Initial jobless claims and continued jobless claims came basically a little bit lower than expected. So in that front, that's okay. But look at this, business conditions good, employment in the negative, that's a miss. New order higher, that's good. And prices paid going lower, that's good. So mixed to the positive, I would say. Retail sales year over year coming down to 1.7. So even though we had a good month over month reading, the year over year it's pulling back. And also on the production and utilization front, look at this, all in the negative. And utilization is the only thing that is remaining there, but production month over month in the negative, year over year in the negative, and manufacturing both in the negative. So I would say that that's a lot of misses, a lot of misses. So this is why the markets in the deep inside they don't want to push. We really need some huge catalyst, some big good news that deletes, removes every single bit of fear of investors and traders. And we are not getting that this week. Finally, on Friday, building permits negative, and that's also a miss. Housing starts in the negative, also a miss, and all these Feds were not providing basically nothing to really be happy about. So as I was saying, The interest rate expectations are still on at 25 basis points. And as you can see, we have this kind of ladder down, step by step down on a 25 basis points. That's the good approach. So on that front, the narrative is good. We are going to continue seeing interest rate cuts in smaller steps, and that's what I like. So I also was mentioning that this week we finished the banks. Citi, Bank of America were decent, but some of their United Health Group were bad. United Airlines were mixed. ASML were really, really bad. And then on Thursday, we got the savior, TSMC, with a huge boost on AI demand and beating everyone's expectations. Also, Netflix doing good. So these two saved the week, in my opinion. So what are we waiting now? We are waiting for next week to basically on Monday, we don't have anything important. But on Tuesday, we start with Veritone, GM, we have 3M. On Wednesday, we have Boeing, we have AT&T, we have Coca-Cola. And after the close, the big hitters, Tesla and IBM, are going to report earnings. Thursday, American Airlines, UPS, and I think that's all. Yeah, on Friday, yeah. So this next week is this upcoming week is going to be interesting. We are on Wednesday going to see quite a lot of volatility and movement. So until then, I think Monday will be key to continue having more patient than usual to really let this market decide what it wants to do. And in terms of price action, so basically this is the weekly. Look at this candle. This candle moved basically 0.16. It moved from the open, watching up here, from the open at 432 to the close at 483. It moved 50 points. So no movement. And we are still in that weekly inverse fair value gap, not being able to go through. So we are continuously rejecting that. This doji makes the indecision not only on the Nasdaq, but on the ES, we got a little bit of pullback, but I mean, the ES is just grinding higher, destroying everyone. The daily has on the ES quite an important candle like this one. This one is going to mark a lot of expectations. We have the 6,000 level up here, so who knows? But the NQ is it's really in another. You can see there's a huge S&T divergence both markets. There's a huge. So we have to really be patient. If you are like me that you want to trade the Nasdaq, you have to really be patient. This was the week on a daily candles. So Monday, a little bit of positive, but then on Tuesday, we have the big sell-off, and then we tried all week to go out of the hole. This candle was really important. And if we put some of the levels, the Fibonacci on this discount, look at that. Look at where we stopped. We almost stopped right there, 2 points above the 50% discount of this candle. So if you're like me, that you are following ICT concepts, be careful with this. Be careful with this. So let's see in the 1 hour the thing that I've been mentioning all this week. All this week I've been mentioning that we were in a range. We tried to break out, but we failed. And this might be a Wyckoff manipulation. So unless we really reclaim those levels. And the first time that we tried to do, we failed miserably. We are still not able to last week high. And look at all this chop on Friday. Unbelievably chop. So we are still under this pivot. We are in that range that is basically in between the daily and the weekly inverse fair value gaps. So let me extend that for you. We are there. When we go too low, there's this 15-minute that claimed, so we balanced a bit, but we are chopping. We are holding somehow, but we are unable to really push higher. And the various signatures are still there. That's why I'm not confident on basically trying to have big trades. This week has been pretty quiet for me in terms of profits. There are profits, but not a lot. So with this price action, it's pretty bad. Look at this sell-off. Thursday, there's a huge boost on TSM earnings. We thought that we were going to undo this sell-off from Tuesday, but we failed miserably. And then look at this price action. Excuse me about the red, but this was the first presented fair value gap that we're just chopping around. And let me just remove that. Look at this price action. This is not efficient. This is not what you want to trade. So excuse me again about the red that it's accumulating here, but it's just a reminder of why I've not been trading much, because we are in a red zone. We are in a huge confluence of weekly, daily, inverse fair value gaps, and I don't feel confident. This is not a market that I want to trade because it has efficient moves, it has pretty decent setups, it's just trending. No, it has all the opposite. The AS, it's quite like this, but it's a little bit more trending. You can see it's trying to reclaim the all-time highs. It's going higher, but the Nasdaq capsule is just trapped in this zone. In terms of the Magnificent Seven, it's overall looking decent. Apple is trying to basically reclaim the all-time highs, 1.23 on Friday. Microsoft is just continuing with a lower high. Tesla is just after the robotaxi failure. It doesn't look good. Amazon on retail sales. Let's see if we start seeing good numbers of sales towards the end of the year, and Amazon can. It's not looking bad. Google is just too low. It's at a level it's not showing a lot of strength. Nvidia, it's also like Apple. It's battling. It's fighting the number one stock in the world in terms of market cap. So Nvidia and Apple are really holding the market. And Meta is struggling to really hold up here. It had a very nice run, but as you can see, it's just Apple and Nvidia which are showing a lot of strength and are really holding the Nasdaq where it is. So it's quite fragile. This circumstance is quite fragile. And at the same time, look at what the dollar is doing. The dollar is just screaming higher. Look at it. Pushing week after week. It's like 3 weeks of squeeze, and it's showing strength, but it's not letting the equities really run. Yields also recovered quite a lot. The 2-year yield, the 10-year yield is also good. The inverted yield curve is still uninverted. So after this pullback, I mean, this is let me just, this is one of the things that you have to see. We bounce from the uninversion again, and we are bullish. So we are going to continue seeing the bomb ticking higher. This is a bomb timer. When is going to be called the recession? Are we going to soft land? Well, banks were doing pretty good. Banks are breaking out. Look at XLF. This is the only thing that it's holding my narrative of economy is banks earnings were pretty good. And even though on Friday we pulled back a bit, regionals are in good shape. The entire sector it's pretty good. But what about consumer discretionary? It looks decent. It's also holding, so we are good in that term. US economy is strong in that way also. This is the ratio between consumer discretionary and staples. We are bullish, so there's a lot more consumer consumption in the discretionary than on the staples. This is not defensive. Staples are also holding. We have energy pulling back. We have crude oil pulling back a lot. That's helping the inflation battle. And we have semiconductors trying to reclaim, trying to push higher. It was not a good Friday, but it was a decent day, a decent week. ASML recovered a little bit, but affected quite a lot. And finally, in terms of breadth, we are there. I mean, look at this. This trend was broken. I mean, yes, just a little bit. The trend was really broken. We are long-term seeing inflows. We are seeing trending markets above the 50, and we are seeing quite a lot of momentum. So even though the RSP it's putting higher lows, it's pretty bullish. We are seeing a little bit of divergence here. We would like to see this level of 68, 70% of stocks above the 200, but we are getting there. We are getting there. The breadth, in my opinion, is good. The Russell, it's pushing. So overall, my summary, if you want to, in just one sentence, how we are doing, US economy is strong, financial sector is strong, Russell and small caps are strong, long-term yields are strong, dollar is strong, US is strong, but technology is quite fragile. The NQ, it's only being pushed by Apple and Nvidia on basically some kind of momentum push due to chips for Nvidia and due to iPhone 16 sales on Apple, but the rest is super choppy. And there's a huge divergence between ES and NQ. So I don't know if NQ will be pushing towards ES levels or the other way around. We might see ES getting out of gas and just pulling back, and the NQ will just drag down the ES higher market. So it's super tricky. It's super tricky. My forecast for next week, it's the same. The same. I have these levels here that need to be broken. These are my levels for next week. Pretty much the same as last week. We need to really see this setup being taken. We need to see this pivot is super important. We need to continue seeing these 15 minutes hold, and we need to get out of this. We need to get out of this resistance and really see momentum. And I think that we might see that in Wednesday when Tesla, IBM, and towards Thursday trading, we might see that catalyst that pushes the NQ. But be careful, because until then, we have to be patient. We have to be disciplined. You don't want to trade this chop. You don't want to trade this kind of market. So I tried to trade, and it's just not giving good setups, not efficient. It's just chopping you around, unnecessary losses. You have to really focus on avoiding those. So that's all from my side. As always, if you found this weekly recap useful, please give it a like, support the channel by subscribing, and because I upload these videos on Saturdays to review the entire week on the economic front, on the technical, different markets, perspectives, levels, my opinion of all these, it's on these videos. So if you really like them, let me know in the comments. But also from Monday through Friday, I upload videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that this week has been choppy. The next week is going to be a little bit more important, but until Wednesday and Thursday, which I think bigger news are going to pick up on price action, we remember to be disciplined and patient and manage your risk. Those keys, those skills are going to be key for your success in this industry. Have a nice day, have a nice weekend, and see you on Monday.